Welcome to the next program section on the A&A portion of this month's program. In this segment, we will consider issues related to your auditing practice. Cryptocurrency is only one use of the blockchain technology, which is one type of distributed ledger. For those who are unfamiliar with the technology, it is similar to a database copied across multiple computers all over a network. The records are not kept in a centralized version. One of its many benefits is the immutability of the records. For more on blockchain and what it means to auditors, let's join Jennifer Lewis, a CPA with Emergent Solutions Group, LLC, and CPE Network's Debbie Grove Casey.
Jennifer, welcome to the program.
Thanks, Debbie.
So today we want to talk about something that's kind of been in the background for a lot of people recently, and that's blockchain. So to begin with, let's talk a little bit about what is blockchain, because some people hear the term and they're like, that doesn't apply to me. What the heck is that?
In its simplest form, it's a distributed ledger. Distributed ledger meaning that there is where there's the different transactions that's created, and in each transaction creates its own kind of block in a whole series of blocks that creates this chain that exists. And they use something called cryptography, that you have public keys and private keys. So public keys is everybody can know that I'm this particular block, right? That this is the key that's associated with this transaction that I can share with people and so forth. And then you have your private keys that are associating it to you specifically. And so the sender and the receiver both have to have private keys to identify them. And it's the private keys that you don't want to share with anybody, right? Because that's the part that it's my wallet, right? It's if I'm trying to say what is it that I'm associated with in this block, I'm associated directly with that and these particular things that had occurred. And what happens is the use of these keys is that they can do these mathematical functions that validates all of the past things that happened associated with your private key, everything that happened previously in the chain that I can validate it to ensure that when you look at one transaction, you're ensure that the security and integrity of everything else in that whole chain of events also has validity to it. And what that means is that in order to change something, I would have to go back and make changes in all these other previous occurrences in that whole chain, because they're validating all of the blocks in the chain each and every time, right? So math wouldn't add up in the end if something was altered or manipulated.
Well, is there a central administrator?
So this is what's different than what we might be thinking about, because we're used to, like, if I go and I send you money, I'm going to go to the bank, and the bank's going to be the central administrator that's going to send you the money, and they keep the records of the check or the wire transfer, the ACH disbursement, and they administer this, and the Federal Clearinghouse is involved, and there is central administration and controls. This is really globally that there's just this global distributed ledger that exists, and depending on who was participating in this chain of transactions, that there's multiple individuals. There's no central administrator or central user in how we think about blockchains, at least now. It might evolve, but now as we think about the ones that we hear about most commonly, like Bitcoin, there is no central administrator for Bitcoin.
Well, can the blockchain ledger be hacked or otherwise compromised?
Because of the way that each transaction is locked up, like once it's verified and validated, it's closed down and it's locked and it becomes a part of this secure chain, it's irreversible, right? Once it's locked down after it's been validated. So therefore and because it's not centrally administrated, all of these different miners that are out there all have a copy of this ledger. And so if I wanted to manipulate, even if one person wanted to manipulate one element of the block, this is a distributed ledger where there's millions of copies potentially of that same ledger out there, and you would have to manipulate the millions of versions of this ledger in order to change things. The block itself isn't necessarily subject to hacking. It's the encryption key that I talked about earlier, right? That's your risk, is that just like you have to guard your password, I have to guard my encryption key, because if somebody has my private key, then they could go in and perhaps fake like they're me, and they could get my Bitcoin or whatever it is that, the data information that I have. So even when there's hacks, it's not necessarily that it's the blockchain itself that's hacked, it's where you have
Points
humans
of
are going to
entry.
be involved, right? Humans are involved, and it's that lost control of the encryption key that led to somebody being able to take somebody's Bitcoin wallet, right, that has their money in it inappropriately.
Well, can you give me a brief overview of how the process works? So say I wanted to reimburse you for lunch today. Could I do that in Bitcoin?
You could. So first you would have to go purchase some Bitcoin, and you can go online, or there's actual Bitcoin ATMs that you go to. So first you have to actually have some Bitcoin.
Right.
And then what you would want to do is you would say you're going to get assigned with that Bitcoin. You're going to have a public key and a private key. And you would have to get my address to know where to send the Bitcoin to. And so using your private key, you're going to say, I'm sending you this Bitcoin. And then what happens in order to occur is that all these, they call nodes or miners, that these miners are required to authenticate through these cryptographic functions, these mathematical functions, that they go back and they look at this ledger, and they go backwards in this ledger, and they make sure that based on all the Bitcoin that you bought and how much Bitcoin you've received and how much Bitcoin you've spent, do you really have 10 Bitcoin still? Like, that's part of it, is validating that you actually have the Bitcoin. And then once they've validated that you actually have 10 Bitcoin, then they will verify that transaction and say, yes, you can go ahead and send 10 Bitcoins to Jen based on these private encryption keys that we know the sender and the receiver of that item. So the validation process, the miners verify the block, they close down the block, they confirm it, and then that now becomes the next block in the chain, and that now becomes irreversible, so that later on, if somebody's looking to see later, you want to have another Bitcoin transaction where they're going to go back and validate all the transactions that occurred, in that whole series of events, each and every time.
Oh, that sounds like a really high-speed computer.
Yeah.
But let's talk a little bit about the miners,
Okay.
right? Because mostly that's what you hear about when it comes to Bitcoins and cryptocurrency, is the miners. So let's talk about who those people are and how do they get their money? How do they get compensated?
And you can think about, depending on the length of the chain, like how long does it take, right, to validate, this chain, and why would somebody want to do that? Because the mining is the act of adding a new transaction to the blockchain. Like, that's mining. The miner then is the individuals that are doing this, and they do it in exchange for being awarded, say, Bitcoin, right? Getting awarded compensation that I can sit and do this as part of my job. That I'm they're validating these various transactions. So it really is that's they're looking for compensation. They are getting paid as getting like a percentage, of the transactions that's going towards their effort that they're expending to support this network. The miners can be global. They can be anywhere in the world doing these mathematical verifications.
Well, what specific blockchain characteristics do you think are the most valuable?
This distributed ledger, the fact that there is no central administrator and makes it such that it's harder to manipulate, because the fact that it's distributed, everybody's got their own copy of the ledger.
Right.
That's key. It also is more of the real-time processing, and once it's validated, it's locked in, and the fact that it's irreversible, that somebody can't go in later and every there's a verifiable record for every single transaction that's ever made on that blockchain. And that could happen then where you're preventing, double spending. Like I already sent the 10 Bitcoin to Jen for lunch. Like I'm not going to send,
send it twice.
right?
Yeah.
So I think that part of it is what's appealing to people is that they have control, right? And I don't have to have my money with the man. Like you can be away from that central administrator and engage in your own economy, in essence, and that's appealing to a lot of people.
Well, do you have any real life examples of how blockchain can be used for various industries?
So obviously, with financial institutions that we can use it to engage in securities trading. You're seeing with utility companies that they're using it to trade in renewable energy credits. I think trading in financial instruments or financial instrument-like type things. But also, governments are looking at it for keeping a chain of who owns that land. Right, that I can do this verification of thinking about, keeping records, right. Of how that ownership of that land is transacted over a course of time. You also can see where healthcare companies are looking at it to keep your health history. That we've got verifiable chain of events around your health history, your personal identity. United Nations is looking at using it for personal identifiable information around people that are displaced individuals that have to, leave a country, for refugees, and how we can still track them through using blockchain. And then from a business perspective, companies like IBM are looking at using it in a supply chain inventory, particularly with another user, that we could operate together where we're keeping track, of our supply chain with each other through using this blockchain technology as well. There's business implications, there's social implications around this technology.
The one I had heard related to supply chain had to do with the issue with, I would call it lettuce, but the romaine lettuce, we would have been able to tell exactly where it was distributed to, and they wouldn't. You can do a targeted recall instead of a massive recall.
Right.
So you could track from which farms the packages came, that kind of thing.
Right.
So that, as you mentioned, has a lot of not just business implications, but social implications and things for people's health as well. So are there different types of blockchains?
Right, there is, and so everybody's like, blockchain's the technology, like Bitcoin uses the blockchain technology, right? So, and there's other cryptocurrencies out there, that exist. In creating your own blockchain network, right? You can have a permissionless one, or you can have a permissioned one. The permissionless one is that distributed ledger. There is no central administrator. Anybody can, get involved in these transactions. The permissioned one would be limited to authorized users. Right? So it's not that anybody goes out and just gets a public and private key. Like you actually have to be allowed to participate in it. And that would be something like if we looked at IBM probably getting into a permissioned blockchain with its vendors of looking at its supply chain. That's not going to be a public blockchain. It's going to be something that you're essentially going to control. Your who can participate in the blockchain will be limited, and the information available also then, right? Because it's not that everybody's getting versioning, right? The different versioning.
Only the parties
of the
involved
record exactly
would be getting it.
Right.
So that could be useful in a variety of ways for businesses. So you can control who you're interacting with in certain instances, but like you might have a public one that customers can come and participate in, but your vendors would be on a more permissioned type situation. So entities would have potentially more than one type of blockchain there. What's an obvious way that blockchain could improve the audit? Certainly the verification.
And then I mentioned supply chain. There's a consortium of users that have a common goal and purpose on how we might be able to use this technology. Because even if it's not when we talk about being distributed, right? It's even though it's not distributed, it's still irreversible.
Right.
You know, it still has a sense of it that every transaction is verified and can't be manipulated. And if we think about fraud risk and how we can minimize that, you know, because once it's locked down, it's locked down. So I think that these, you know, there's drawbacks, you know, that exist with the permission lists or the more public blockchains that you can close up as it relates to having these more permission-based, limited blockchains as well.
Well, if the way that transactions are initiated, authorized, processed, recorded, and reported evolves, what traditional audit procedures may also need to evolve?
So one of the ways that, I mean, you think about, like everybody thinks about confirms, you know, when I have to go and I have to confirm, you know, balance at a bank. And so you're going to say, all right, well, I could just, through blockchain, I could go and verify the balance per bank. I don't have to send the standard bank confirm. I don't have to go online and look at it. So, the thinking about, for confirmation processes, whether or not that could work. And I could think about, is there a way with blockchain, a lot of companies, a lot of CPAs are really struggling with confirms for receivables, and that there are, you know, customers that just aren't responding to the confirmation request. But if the company had a blockchain set up with their customers, then I wouldn't have to send the external confirm because I could go straight to the blockchain and make sure that it was a validated transaction that couldn't have been manipulated, et cetera. I could see a path for that in the future related to those verifiable transactions. But and then the question then becomes, well, if I can verify all of the receivables in this blockchain, then I don't need to do a sample. Right? Because you can do 100% of the population and feel comfortable about it.
And no time. Because
in
it's
no
all
time,
computer-based.
This sense of figuring out scopes and sample sizes and coverage and all that, you know, will be less critical as we look about, you know, verifying things.
Yeah, and you could even set up a report so that it only pops out the ones that are exceptions, right? So that it's even less to look at. So could blockchain result in real-time auditing?
It could. And so if we have a double ledger, right, between me and the vendor, then you could have a triple ledger where it's also putting the transaction over where the either internal audit or external audit can get access to that ledger, and there could be continuous real-time auditing of those transactions.
So, you know, there's been a lot of talk about certain procedures or things that CPAs perform, moving either being outsourced to other countries, or that basically blockchain will make CPAs obsolete. Now, that's not what I'm hearing from others, but I'm interested in your opinion there.
So I think even if, like in a blockchain, if I could have a contract that we encrypt and we store in the chain so it can't be manipulated, somebody still needs to read that contract, understand what the terms are, look to see is there non-compliance with terms and conditions. You're still going to have lawsuits. You're still going to have estimates, you know, around the value of things. Like I might own, you know, 1,000 Bitcoin, but how much is that worth? You're never CPAs are never going to become obsolete. They're going to be focused on different risks and issues. Potentially, like I'm not just doing like the debits and the credits and the vouching, you know, ticking and tying things. But the bigger issues about reasonableness and fair value and likelihood of outcomes,
gray areas now.
Things that are more of your higher risk considerations. Now we should be focusing our effort on the areas that have the more complex subjectivity, judgment, uncertainty. We already focus on those transactions as being higher risk in an audit, or at least we should be. I think that that's what will happen with auditors, but also just the CPAs, you know, the controllers of companies and things like that, less focused on transaction processing and more on the preparation and fair presentation of the reporting.
Well, one of the things with blockchain, and we talked about this already, is the verifiability and how having it as a distributed ledger with multiple copies is, you know, basically, I won't say irrefutable, but they lock that block down, and you can't really, no one can really go in and change it without changing the million other copies that exist.
Right.
So does blockchain eliminate fraud risk, or does it just move it?
It just moves it because you still, if you think about, there still is the integrity of the operating environment of that blockchain. It's highly dependent on the security of that underlying environment. And in fact, when there was a fraud where $32 million worth of cryptocurrency was stolen back in 2017, that they found a vulnerability of getting people's their private encryption keys, and that enabled them to go in, and target all these different wallets and to take the money. And that risk, the fact that there's still vulnerabilities in the operating environment itself, is still going to be there.
Right. So we just need to know what it is that we need to look for.
Right.
So what types of controls may need to be assessed if blockchain is implemented at an audit client?
So its risk is going to be like password security, but my encryption key security. And then what happens if I accidentally I initiate a transaction and I have the wrong address, right? So I make a mistake.
Yes.
And I send it to the wrong party.
Mistyped.
I mistyped,
right? It's
right?
off by like one letter.
Exactly, and then it's gone, right? Because it's irreversible. Like
Right.
if the risk is that I make a mistake of where I'm intending to send it, the miners validate that block, close down that block, and now it's irreversible. How do I get the money
my
back?
money back?
Right. So it's not like you have a phone number and address to call for that other party.
Yeah.
So definitely the unauthorized or just mistaken addresses, an error that could happen, and I think phishing and the risk that you have with phishing schemes of trying for somebody to look for vulnerabilities in order to get your encryption key, I think a lot of that is going to be focused on these encryption keys, not just them being lost or stolen, but errors in entering in the key where it goes to somebody that wasn't authorized.
Well, does blockchain present any limitations in gathering that sufficient and appropriate audit evidence in a financial statement audit?
Because we don't, yes, because of the same risk that we just talked about. Like it might have been a unauthorized transaction that got into the chain. It could have been that there was, the other risk is that we put things in the chain, but I'm colluding with the other party, right? So if we think about even now, I can send a confirm to the customer to say you owe $100,000, but off chain, right? We're like, you don't really, we're not going to make you pay it. So you're still going to have the risk of override and collusion amongst these different parties that could result in an intent to deceive that still could happen. In this verifiable chain. Yeah.
Well, what new services could a CPA offer with migration to blockchain by various businesses?
So smart contracts are starting to evolve in context, and one of the ways that you can have a smart contract is we could say, okay, we're going to come into an agreement where we're going to agree on entering into a contract that's tied to the price of oil, and so as some sort of derivative. And so we enter into this, we write this smart contract, and what happens is that the term of the end of the year, that the smart contract goes out and figures out the price of oil, does the math depending on who owes who what based on that changing price in oil, and automatically sends the Bitcoin or whatever off, to the designated parties, and so it's all, and then the miner is validated and it gets locked down. So there can be that systems are initiating going out and actually concluding on contracts that are built into this chain technology with these smart contracts that have this embedded processes and coding in it that tells it at a certain point do X, Y, Z, and then it's just going to automatically go and do it. Now, there's a lot of inherent risk as we think about these contracts and how it is that we want to mitigate it. We want to make sure that the code is written in the right form as it's intended to be written as we're locking down this smart contract.
Yeah, so that it operates as intended.
So I think that engaging a CPA to help verify the propriety of the smart contract and the correctness of the logic that's written into the contract will be an evolving service that could be engaged.
Well, could the CPA provide assurance about the stability and robustness of a private blockchain's architecture?
Absolutely, just like we have service organization
Organization
control
reports.
reports now. We can do cybersecurity risk management reporting. You know, we can do examinations of that. You can absolutely do an examination of the, you know, particularly in the private environment, right?
Yeah.
Where we've got permissioned blockchain, that assurance about the stability and robustness of that system.
Yeah.
But could I also maybe go look at doing some testing of permissionless systems by
Right.
doing some testing of seeing, can I penetrate it? Can I, you know, do
Yeah.
penetration testing and things like that? You could even do it on permissionless
Yeah.
systems,
But
but
I
it
could
still
see
gives
that
some
being
form of assurance.
a real positive for an entity in terms of acquiring new vendors and getting maybe better rates because they have, you know, a report indicating that their systems are, you know, you can participate in this type of an environment and, you know, our stuff is automatically verified and, you know, the speed and verification there would be, I would think, attractive to some
Sure.
other organizations. So you could get these reports that would say, like a service organization report saying that, you know, our permissioned blockchain, you know, has been verified by whomever they chose to engage, right?
Right.
So could an auditor act as the access granting administrator in a permissioned blockchain?
Sure, right? That's another thing, that if we have this permissioned chain and there is a central administrator that's controlling that and doing the verifications, that having an independent person, independent
Right.
party verifying the chain as opposed to these nameless, faceless miners, you know, out there in a permissionless environment, that there could be a role for that, that we say who's allowed into the chain, we verify the transactions in the chain, like that could all be something that an independent person.
I'm
could
sure
do.
that's the next thing we'll hear about from the ethics people
Right.
as to whether or not that impairs people's independence. But-
Right.
So what about resolving disputes between those blockchain participants? I mean, because who does that if there's not a central administrator? If it's not
Right.
permission, it's permissionless.
Right.
How do we go about resolving those?
And so having an arbitration party, you already have, you know, CPAs sometimes that function in roles like that. So I could see where they could be an option for that, you know, in addition to attorneys. But could we have some area of specialization where we act as the arbitrator between these blockchain disputes? We could definitely do that.
Well, we've primarily talked about external auditors here, but what kinds of implications do we see for internal auditors?
Anything that's record-based is going to be of concern for
Yeah.
internal auditors. So while we may have the external auditors that are here that are able to give assurance, give examinations, right, do agreed upon procedures, like do things where I've got somebody that's independent and objective, a role of internal audit of doing within organizations, doing your own penetration testing, you know, looking
Yeah.
at smart contracts and all that type of stuff. You're going to do the same things with the best interest of the organization in mind, as opposed to thinking about the public's interest and, you know, being somebody that's objective and independent in looking at both sides.
Well, thanks, Jennifer.
Sure.